Good afternoon, Chuck Carstensen, Remax Results, live video in the office today, and we normally like to do a lot of property previews and showings on our live videos. It's been rainy and gray and cloudy, so it doesn't look as good when we do that. But we do have a couple live shows at our listings that are new or coming on the market coming up yet this week, assuming the weather cooperates, so stay tuned for those next couple days. And today, you might see the topic posted above the video as far as 3 different markets within the real estate market. How can that be? What's that mean? What are the challenges? So I'm going to share that with you. It's going to take a few minutes to dive deep and go through it. We appreciate you watching this. If you have questions, you can always private message us. You could post a question below, or you could remain anonymous and get the info. It's all good. And we post these on YouTube later. So, all right, so let's look at what that means. 3 different markets within the real estate market means the market's done a shift. You've heard of the buyer's market, the seller's market, and then I've talked a little bit lately in a couple videos about it being a normal market. But what it is if you break it down at certain price points, certain locations, we still have more of a seller's market. For example, that's one of the 3 markets I mentioned. In the first-time home buyer price range, or the lower price point price range, homes in, I'm sitting doing this video in the Cambridge Remax Results office. Homes for first-time home buyers are around $200,000 now in that area. If you go a little bit, say, south, I would say Blaine, a lot of times that's $250,000. And maybe you know where you're at and what your market price point is for starter home prices. Maybe you don't. But in general, it's the bottom level of the prices. Although for you, $200,000 or $250,000 might sound super expensive. So what that means is that's a seller's market. For those properties that there's still not too many of them, if they come on the market, they normally sell fairly quickly, and often they still do get multiple offers. Seller's market when that happens, because the seller watched one of my videos before, you might not know that. If you've watched some of these before, you get the picture on what it is. The buyer's market is, back when there's a lot of foreclosures, short sales, and the market was down, it was a buyer's market. Prices were really, really low. Or you could make offers on properties and maybe the price was higher and you'd offer lower and negotiate it really close to what you wanted, meaning as a buyer, you kind of got what you want or the prices were low. So where the buyer's market is on the super higher price range. It's more of a buyer's market, meaning wherever you're at, more of the luxury price point or the above and beyond price point that most people can't afford, there's still a decent amount of listings, but not a lot of buyers for those. And that price point, it's a buyer's market. So if you got that super elevated luxury type of property and you don't give any showings or it takes a long time to get people on that one, and that could be different. If you're in Edina, that's probably over $1 million. Or if you're on Lake Minnetonka, $2 million maybe on a few of those homes, but obviously higher. If you're out in Cambridge or St. Cloud or some of those other areas, that could be $500,000 or higher. But anyway, in that price point, that's more of a buyer's market. Not that many buyers, and if you have that property, you're like, okay, is somebody going to come along? And when they do, they'll probably actually lowball you on the offer. And then you're going to have to work it out. And the buyer can really dictate it because they can just go down to the next option a lot of times and get it. And then that middle price range, in between the first-time homebuyer price range and, maybe the move-up property, your second property, something outside of town with a little land, or just something a little bit bigger than your typical starter house, that's more of a normal market, which I've talked about in videos before, where you have something that maybe in the spring was selling super, super quickly or getting multiple offers. Now it's not like slow, it's just a normal market, meaning it lasts a little bit longer in the market and buyers will still make an offer. And we run into that as far as working with buyers. Hey, we can make an offer now on this one. And then as far as working with sellers, they're like, well, damn it, I thought I was going to get 10 people buying this house. And it's not that way right now on that second tier of properties. It's not a bad thing. It's a normal market, taking longer, and some of the buyers are making offers. So that's the 3 markets within a market. The starter price ranges, still mostly a seller's market where the sellers get their price. That middle tier I just explained, more of a normal market. seller could get their price if it really stands out, or if it needs a little bit of touch up here and there, it's going to maybe attract buyers, but they're going to offer low. And then that upper tier is more of a buyer's market, not because the price is high, that doesn't make it a buyer's market. It's because you can look at the price and they're going to offer less, and the seller's going to have to be ready to negotiate. So what's that mean? So on the maybe the challenging side of it, or negative side, I don't want to use negative, but on the negative side or the challenging side, it means it's not very affordable to buy a house. We have some buyers, that want to buy a house 150 and under. There's not much out there in most areas, and if that's all they can afford, they're in trouble because it's not coming down anytime soon. So it makes affordability for housing not as ideal as it maybe was a few years ago. So that's one of the downsides. The upside to it is there's a lot of movement in real estate that gives you some options, especially if you own a house and are trying to move up in price point. You can maximize your dollar on your starter home, and as a seller then maybe you're more negotiable on that second home, or maybe you've really increased your income, you're going for that luxury home, and again, you should be in a better position to negotiate it down, at the same time getting the maximum for your house on those starter homes if you're moving up in price. So that's a positive. There's other positives to it. It's it's just how the economy works. I think getting to a normal market in real estate, which we haven't really been at. It was super high, and 2005, 6, and 7, it started to go down, and then it went really low, and now it's been pushing back up. It actually probably is good that it levels off more, and we have these three markets within a market. It makes it more of a normal market in general. And I've talked about that before. We'll probably talk about it again. And I wanted to educate people on the market a little bit more. I like to do that a couple times a month. Obviously, if you have questions, you guys can let us know. Obviously, if you're looking to buy a property, sell a property, just find out your value on a property, let us know as well. You can reach out to myself, Chuck, or my sister, Michelle, Stacy, or Barbara with our team. And we thank you for watching these. And we'll have a couple live videos at some of our listings coming up here in the next couple days. Otherwise, have a blessed day.